Part 2 of the special report on Reserve Bank and how does Reserve Bank interest hike affects different groups of families unequally. Please read this part carefully, as the life and health of your family depends on it. Please pass this entire message in Part 1 to all of your contacts, also to MPS, unions, all media. First thing you will notice is that there are many governments who manage the people of Australia. They are the ineffective Parliament, Reserve Bank, supermarkets like Aldi, Coles, IGA, Woolworths and Oil, gas, petroleum, insurance companies. These companies are all out of control. They are the cause of inflation. We need to do something about it. Now let us go to the analysis and see how we can solve this. There are three groups of families. Individuals come under Reserve Bank interest rate hike. Group 1 who have paid off all their mortgages, loans. There is no effect on them, whether the interest rate of Reserve Bank goes up or down. Therefore, their net contribution to government's monetary policy by Group 1 $0. Group 2 have paid off all their mortgages and loans, and have accumulated or inherited wealth, deposited in the banks and earning interest, and laughing all the way to the bank. Because higher the Reserve Bank rate, the higher the deposit rate, and they earn higher return on their investment, which is just the opposite of what Reserve Bank wants to happen, to reduce the cash flow. Who is paying for the increased interests, for the deposits in the banks of these Group 2 people? Group 3 people, loan owners, of course. The hard-earned money of the mortgage and loan owners. This is not acceptable. Why would the Group 3 pay? If government wishes to pay interest on the deposits of Group 2, let them pay from the Treasury. At least it is coming from the revenue of all Australians. Again, not on the mortgage and loan interest payments of Group 3. Net contribution to government's monetary policy by Group 2 is $0. Group 3 who have mortgage loans, credit card loans, business loans, and who pay through their noses to contribute to manage monetary policy of the government and pay to Reserve Bank rate hikes. The most important question is, where does the extra interest deduction of Group 3 due to the rate hike go? Some of them who pay for the rate hike, maybe by doing a second job and have poor quality of life and low life expectancy, especially for their poor kids, and miss family life, which create stress in their relationships. Only Group 3 pay to government's monetary policy. They are the losers in Reserve Bank's rate hike. This is not fair by Group 3. We must remove this burden on Group 3. There are clean methods to solve this burden on Group 3 without affecting any of government's management of monetary policy. Method 1. Please read carefully. Group 1 and Group 2 not paying any cent to Reserve Bank hike. Why should only Group 3 pay to the government their deductions due to the increased Reserve Bank's rate hike? Therefore, Group 3 deductions should be cost neutral to Group 3. How? Since the deducted money do not belong to the Reserve Bank or to the government, it will be managed as below. These deductions are not owned by Reserve Bank nor government. Therefore, these deductions should be managed by adding them to individual loans, thus reducing their loans. This will help to reduce their mortgages and other loans immediately and bring the Group 3 to become Group 1 faster. Method 2. There is another method that is fair to all citizens. It is a bit difficult to understand. Please patiently read and understand. Please bear with me. All the citizens, families, earning an income from any resources or jobs greater than a minimum threshold, for example, maybe $50,000 per, will pay the interest on the rate increased by Reserve Bank and contribute to monetary policy of the government. How much? This interest may be calculated on an average loan to be decided by the government, for example equivalent of maybe $500,000. That is, all individuals, families with total income above the threshold, example $50,000, will be deducted by that increase in interest calculated above. One thing is sure, there will not be a need for very high interest rates to achieve the desired outcome of lowering cash flow to control the inflation. When everybody is paying for the increased interest rates, demand goes down and the prices go down faster. Again, these deductions are not owned by Reserve Bank or governments and should be managed to reduce the loans of Group 3. For others, who have no loans like Group 1 and Group 2, these deductions may be held in a government trust and returned when the inflation crisis is over. Of the two methods, it is fair by all citizens that Reserve Bank choose the second method. Thanks for reading. Thanks for thinking.